one day at a time.
It's that real this time around. Lock and load.
Get on your knees.
This is the point of no return. I can never go back. Life without parole, upstate, shackled and trapped. Living in the hole, looking at the world through a crack. That I'd rather shoot it out and get clapped. I've gone too far, there ain't no coming back for me. Auschwitz gas chamber full of Zyklon B.
Welcome to Orwellian Optics, the podcast that clarifies modern finance through a macro lens. Brought to you by Alio Capital. We're here to break down how macroeconomics, policy, and political power impact your personal finances and your family's future. Experts agree geopolitics is the biggest risk to your portfolio. We're on a mission to cut through the noise, challenge conventional wisdom of investing, and arm you with the insights you need to stay ahead of the game. Together, let's dissect these critical topics and reclaim control of your freedom and financial future. Welcome, ladies and gents, to another episode of Orwellian Optics, a podcast by Alio Capital. I'm one of your co-hosts, Chief Executive Officer Joseph Gradante. I'm here with my co-host. What's going on, AJ?
Hey Joseph, man, it's been a crazy week. There's so much going on in the markets and in the macro landscape, and really excited to talk with you guys here this week all about it and see what we got to unpack today. And Tyler, how you doing, man? Good to see you again.
It's been a wild week. What a roller coaster. You know, probably the biggest week since either COVID or the great financial crisis. So a lot to unpack here. Record-setting volumes, tons of volatility. Let's dive right in.
Yeah, well, we got a special treat for you guys. We got a special guest here, a guest speaker, and she's going to really speak to the soundness of really the economics behind tariffs and really the implications that are at stake. So, with no further ado, let's bring her on.
How far does China have to go? How much more repression? How big a trade deficit and loss of jobs for the American worker? And how much more dangerous proliferation has to exist before members of this House of Representatives will say, I will not endorse the status quo. As I mentioned, it's about jobs, proliferation, and human rights. And there are those who say we shouldn't link human rights and trade and proliferation and trade. I disagree. But if we just want to take up this issue on the basis of economics alone, indeed, China should not receive most favored nation status for several reasons that I'd like to go into now. I'd like to call the attention of our colleagues to this chart on the status quo that the business community is asking each and every one of us to endorse today. Right now, we have a $34 billion trade deficit with China, the 1995 figure. It will be over $40 billion for 1996. Since the Tiananmen Square massacre, this figure has increased 1,000%, from $3.5 billion then to about $34 billion now. In terms of tariffs, I think it's interesting to note that the average U.S. MFN tariff on Chinese goods coming into the United States is 2%, whereas the average Chinese tariff on U.S. goods going into China is 35%. Is that reciprocal? On exports, China only allows certain industries into China, of U.S. Industries into China. Therefore, only 2% of U.S. exports are allowed into China. On the other hand, the U.S. allows China to flood our markets with a third of their exports, and that'll probably go over 40%, and it's limitless. We have not placed any restriction. In terms of jobs, this is the biggest and cruelest hoax of all. Not only do we not have market access, not only do they have prohibitive tariffs, not only are our exports not let in very specifically, but China benefits with at least from U.S.-China trade. The president in his statement requesting this special waiver said that China trade supports jobs in the United States, 170,000 jobs, whereas our imports from China support 10 million jobs at least. Fact is that U.S.-China trade is a job loser. And one of the reasons that is because first let me just make another point, and that is that our colleagues on the other side of this issue will say the trade with China, exports to China have increased 3 times in the last 10 years. They have. But they fail to mention that imports from China have increased 11, thereby leading to this huge trade deficit. The other issue, in addition, if intellectual property is a $3 billion loss, Technology transfer is in the hundreds of billions of dollars. If you want to sell to China, your products into China, the Chinese insist that you open a factory there. They misappropriate your technology, open factories of their own, and then say to you, we want to see your plan for export. That's as simply as I can say it briefly. But the fact is, this isn't about products made in America. The Chinese want American products that are made in China. And the most serious of these transfers of technology are in the airline industry, where Boeing tail sections of the Boeings were mostly made in Wichita, Kansas. Now they are made in Shen province, where workers make $50 a month. And they had the transfer of the technology and the transfer of the jobs has taken place. General Motors, Ford, they're all fighting to get in to build factories there so they can make parts there. They want MFN so they can get those parts back into the United States. So we are exporting not low-tech jobs and textile jobs. We're exporting our technology. Now, if you take a country the size of China with the very cheap, and in some instances, slave labor, the lack of market access, the rip-off of our intellectual property, the transfer of technology, a country that is not willing to play by the rules in any respect in this trade relationship, you have a serious threat not only to our relationship, but to the industrialized world. And if there's one message that I want our colleagues to understand today and our constituents is that on this day, your member of Congress could have drawn the line to say to the President of the United States, do something about this U.S.-China trade relationship that is a job loser for the United States. And this brings us to the point that others have said, well, we can't isolate China. Do you think for 1 minute that with 10 million jobs at least, and $35 billion and be over $40 billion this year in a trade surplus, all those billions of dollars in surplus, that the Chinese are going to walk away? Where are they going to take 35 to 40% of their exports? Who's going to buy them? This is what sustains the regime. The funding and the jobs. They can't have those people out of work. They have to be at work exporting to the United States.
Well, there you have it. And sound familiar, guys?
Oh man, Uh, it's like buzzwords from the last week, right? You know, retaliatory tariffs, trade deficits, unfair labor practices, $50 a month to assemble airline, I guess Boeing tail sections. Like, if you put a deep fake of Trump's face over that Nancy Pelosi interview, it would be exactly the same. You could sell that as a legitimate, Trump administration talking point down to the T. So it's it's actually encouraging hearing that from the other side of the aisle, even if they're 30 years, behind the ball here, and going back and trying to say, that these things don't make sense, that there's no basis for doing this when you hear it from the horse's mouth. I mean, this is legitimately a national security issue. It's a jobs issue. It's an economic sustainability and policy issue. And the fact that it's taken now 30 years from that original Pelosi interview to now for anyone, whether Republican or Democrat in any administration, to address this issue head on and actually do something about it is just a sad state of affairs. And it's an indictment, of the political class and their backbone and will to kind of stand up for the American people.
See, bipartisanship must not be dead. It's just 30 years removed.
Yeah, no, I just think it's as you said, AJ, it's an indictment, right, on the plutocracy, and it just goes to show you that, I mean, it's there's somebody, right, that obviously owns our political system because, this conversation was going on 30 years ago and Nancy Pelosi was on the other side of the issue. So how did she get to the, you know, how did they flip flop? How did the party flip flop? And so when you look at the fact that I think Democrats outraised Republicans somewhere between in Florida races, it was actually they were outspent, 7 to 10 to 1. But in general, I think they average about 4 to 1. That they now represent the billionaire class, which is why the neocons like Dick Cheney and Daniel Steele and these guys Bill Kristol, they supported Kamala Harris in the last election, and yeah, this idea that they're going to continue this, the way the media is attacking Trump, they're going to continue this trade system in which the people at the top benefit from slave labor. I mean, people making $50 a month, right? That's why they get everything made cheap there, and then they sell it back to Americans. And meanwhile, the standard of living for 99% of people is just declining, and they have no representation or haven't had any representation in our government for quite some time. I mean, since you go back to Gore Bush, really since then, it was the same thing for a long time until really 2016. All of a sudden, this populist, there was this reaction to globalization on both sides of the aisle, where you had Bernie Sanders, you had Trump, but on one side, the super delegates on the Democrat side, they were not gonna, they were, that it was already going to Hillary Clinton no matter what. So uh, that's how you ended up getting this massive movement around Donald Trump today. Tyler, what are your thoughts?
I mean, the video just kind of goes to show that the underlying premise is probably sound, regardless of what party is putting it out there. I think it's no mystery that America has been getting screwed, for lack of a better word. We're the wealthiest country in the world. Everyone wants access to our markets, but nobody's real fond about letting us have access to theirs without some hefty fees attached. So this was probably a long time coming. The way I see it from here is you have two ways that you can look at this. That one is Trump pushed too hard, too fast, and he's starting to break things. Or two, that a massive shot across the bow was absolutely needed to get the world to capitulate. And right now, we're still too early on to really tell if that approach is right or not. But, I think if we get Canada, Mexico, and the EU at least on board, that may be an encouraging sign that China could be soon to follow. I think AJ has talked about there's power in numbers, and the pressure of the herd may cause China to move a little bit on this. But I'd be curious to hear your guys' thought. Trump definitely took the massive nuclear option right out of the gates. Do you think it was a good idea? Do you think it was a bad idea? Was there a middle ground to be found here? What do you guys think?
I personally, I like what he did. If I don't know if there would have been a middle ground. I my only concern is some of the establishment Republicans in the Senate, um, and them kind of dragging their feet with the tax bill, because I think, if you get the tax bill passed, it really negates, right? It's that you have certainty, at least on fiscal policy, right? That I think the markets are just as spooked of the prospect of having the largest tax increase in history this year, as they are the tariffs. I mean, tariffs, uh, you know, trade only accounts for 14% of GDP overall. So to me, like, I mean, our premise here at Alio is, right, it's macro investing. Markets are basically a byproduct of monetary and fiscal policy, and you have tight monetary policy, you have uncertainty in fiscal policy, and then on top of it, you have this other little sprinkle here of tariffs, you know, um, and we're in a new regime. But AJ, I'm curious to hear, your thoughts on, is there something I'm missing here in terms of another way that middle ground could have been struck that I'm not privy to?
No, it's a great question, but the question I think that the Trump administration and the advisors in the administration were asking themselves were, it's almost, I think, a requirement if your goal is to negotiate and secure more favorable trade arrangements, then your best leverage is time, in the sense that you don't give other countries a chance to respond over a long period of time where they can plan and execute alternative mitigation strategies. So, if you said something like, "Hey, we're going to put, these tariffs in place, but they're going to go into effect 6 months or a year from now," then you give countries a chance to, kind of shore up their own fiscal situation, cut rates from the central bank perspective, do all kinds of things to kind of mitigate that damage, which lessens our leverage at the table. And one of the things that I think has been demonstrated here is that, this nuclear option, I think, is much more devastating to countries who rely on selling into our markets than it is going to be for us. It's certainly going to be painful, if a bunch of countries refuse to negotiate or don't come to the table or we can't get deals done. then prices are going to go up on a lot of things that Americans need in the short term. But the optimist in me would say that that's a temporary situation, and that within a few months' time, you'll find that these countries really can't sustain losing. If they're exporting 30% of their total exports to the U.S. and exports make up a reasonable percentage of their GDP, there's a bunch of probabilities where that results in massive recessions in some of these countries who are very export oriented to the United States, and they're not going to be able to sustain that trajectory. You know, the the leadership of those countries has a choice to make now where they can either come to the table and maybe appear weak in the short term, but put their countries back on solid growth footing going forward as they, you know, open up the American market again. And it actually provides an incentive for countries who negotiate first are probably going to get better deals, because if you're Vietnam and you come to the table now and you negotiate and you get a deal that maybe doesn't favor you as much as it was prior, but you get a deal while China doesn't have a deal, then suddenly there's a massive gap in the market for you to grow into if China's not able to fill that gap. So I think there's, a little bit of a race to the bottom that Trump just kicked off, where countries are going to be willing to negotiate in a way that might be, worse than they were, but if they can get the deal done first, then there's a gap in our market where they can come in and just say, "Hey, there's a bunch of countries here now who can't sell into the US, and we can, even if the terms weren't as favorable as they were a month ago, we can grow, 3, 4, 5 times in terms of, what we were able to export into the US a month ago versus maybe what we can export into the US this year." So I think it's a unique situation, but I'm not sure there was an alternative. If you really believe that this had to be done, then it had to be done quick and it had to be done decisively.
It had to be. I mean, we're, $36 trillion in debt, but like as Tyler said, we are still the largest consumer economy in the world. And so we have that leverage, and that they need in China's case, they are completely dependent on exports, right? They do not have, the consumer base yet to really support their own economy. And I don't really have much data to back this up, but it's more of a kind of a gut thing based on things that China's been caught doing in the past. I, I question some of the things about their economy due to the lack of transparency there. And, is sometimes the hype really, bigger than, the fundamentals, supporting that economy. And so, 4 years, you put this pressure on them. Like you said, you go big, they cannot wait 4 years. They cannot hold out. They do not, they are dependent on us. Um, and, I mean, if you look at the fact that, selling into their markets, right, 67%, is what I've seen on certain charts that so they're trying to limit our access to their markets, and then they're selling back into our markets. It's totally just, lopsided. And so the only way to do it was this way. I think Trump's analogy about taking medicine when you're sick is that we're sick. I mean, we have $36 trillion in debt, despite the fact that we are the largest economy in the world, and we don't have there's a spending issue here, right? And we don't necessarily have a revenue issue, but if we can keep production here, right, and keep innovation here, it is it is good for real wages. It is good for the worker, and that money gets spent back in the economy. And when America was at its peak, we had different trade policies, right, on the world stage. We had tariffs, right? You had an economy in the 1950s in which, the worker did well, people at the top did well, and there was enough to go around for everyone. Now, we live in a society where we step over our, you know, uh, brothers and sisters in the streets that are living in boxes. And, that's not what a society should look like. It just shows you how ruthless the system is. And, I'll say this. Last week there was, I live in Portland, and, I saw these riots, and, not riots, as in protests, right? Protests, but some of the people were arguing, and it got rowdy. And it's like, when you see Nancy Pelosi, giving this speech. And then you see Donald Trump saying the same thing. And then you see people who don't even know each other fighting each other, with each other and saying all these hateful things towards each other. It's like, why? Really, why? And so it goes back to your original point, AJ, of the indictment on the political class, right? And how they sold America down the drain to enrich themselves. And here, both sides, walk away. It's just an indictment on how both sides are profiting off the system, while the people suffer. And the more the people keep yelling at each other, replace the guys in the red ties with the guys with the blue ties, and the guys with the blue ties with the guys with the red ties, nothing changes. And the one, to me, in the case of Donald Trump, it's not that I agree necessarily with his statesmanship or a lot of the things, but from a pure economics perspective, to me, this was the right medicine at the right time, to cure our country's ills, and I think that we're going to be a lot better off because of it. 12 to 18 months from now.
Yeah, and just to add real quick, like the the concept of fairness, I think here is important because you can argue about maybe the specifics of like does it make sense to tariff a country like Vietnam or a country like Australia or some of these things, and maybe the answer is maybe not in isolation, but what this broad based tariff policy says to the world is that we're tired of effectively financing your growth at the expense of the American people. And if you want to do business here and use our consumption base as an avenue for you to grow, your GDP and increase the standard of living of your country, then there's a price you have to pay for that. And you have to at least give us something in return for what we're delivering to you. And what this says is again, Joseph, to your point, the the ability for the political class to turn this into some kind of issue of, hey, it's those guys, it's not, it doesn't make sense, it's insanity. It's like you were advocating the same approach 30 years ago, and what changed? And the answer is nothing. The answer is the policies coming from someone with the red tie and you're wearing a blue tie. And it's just a shame to me that we've reached this point where, I think both people, on sides of the aisle can agree the government, that we deserve, that we've fought for as a country and a nation and a people is a government that works for us and not a government that extracts from us. And what I think most people intuitively feel, whether you're left or right, libertarian, whatever, like the government basically is just extracting value, and what do you get for it? Like roads, the roads suck. Like there's nothing, if the federal government disappeared tomorrow and there wasn't cable news, how long would it take you to notice? Months? Years? Like for the average person who gets nothing in return, like that's a really profound question. So when you actually have someone go to bat and say like, "Hey, you guys have, I notice it. You've been screwed. You've been let down by your politicians, by the government. You've been basically sold a bill of goods, and I'm here to fix it." Like, why is anyone surprised that that's a winning message? Like, yeah, the methods or the communication is maybe up for debate a little bit, but whether this results in a better functioning global economic system or not, at least he's trying, and at least he's putting out a path towards a better, objectively more equitable solution for people that doesn't just enrich, all the capital holders at the top over and over again.
Yeah, and I think that's just before we, just go to our closing segment here on markets, I'd say the term equitable, right? It's just, yeah, I mean, you nailed it because that is the way through policy we will achieve equitable outcome, right? Like, not to get into DEI, but when you try to pursue a policy that really you have to look at the data. It goes back to my point about data science really being the solution to policy, right? Like, did DEI really make anything more equitable? Did the standard of living increase for the average American? Did the standard of living increase for the bottom American? No, it's gone down. So, and it's continually gone down. And so, if we just look at that data, like, why can't we just, eliminate ideology, right? Because it's dangerous. Like you said, libertarian, Democrat, Republican, capitalist, socialist, and just take I hate the word because it almost sounds ideological, utilitarian, but let's just say a utility approach in the sense that what's the greatest good for the greatest number of people, right? And produce an equitable outcome. And it seems to me that from a policy perspective, he's trying to do that, even if the message sometimes can seem a bit cantankerous. Tyler, you have any closing thoughts on this before we just talk about markets, even though there's really not much to say there, but
Yeah, I mean, I think a lot of people will still support him for the reasons that you said. This is kind of a long-term vision to, I would say, kind of even the playing field for the average American. And I think that the message that the Trump team has actually been pretty good about putting that message out there and kind of reaffirming that yes, there may be short-term pain, but the long-term direction is sound. So I think you'll still get a lot of support, even though we're all taking hits in our portfolios. And as we go into a discussion about markets, it is worth noting that since we've been on the call here, Trump actually dropped or paused tariffs against non-retaliatory countries for the next 90 days. As of right now, the S&P 500 is up 7.5%. So we are seeing economic statesmanship happen in real time on this call. So
on
with
this
that,
podcast.
or on this podcast. Yeah, with that being said, AJ, I'll turn it over to you for your commentary, but I just thought that was worth noting.
That was a great call, bud.
Yep. No, that we're actually, I mean, we're recording this, here on a Wednesday afternoon out here on the East Coast, and Wednesday morning for you, Joseph. But the the landscape's really shifting beneath our feet. So, we're at risk of sounding stale, by the time this comes out. But like Tyler said, we got the S&P up over 6, Russell over 6.5, the Nasdaq up 8. Things are really ripping on this news that Trump's announcing a partial pause on some of these tariffs. So, the markets, and this is not unexpected either. One of the key indicators that I like to look at is the VIX index, which is basically a proxy for what price people are willing to pay for put options, for protection on their portfolios, to prevent against some of these more extreme drawdowns. And when the VIX is elevated, like it's been closed above 50 yesterday, I believe. You get these really extreme moves as a natural phenomenon of being in these highly uncertain times. So it just speaks to the kind of ethos of Alio Capital, and what we do and what we espouse and what we preach to our clients, and to the folks who've entrusted us with their wealth and their money. And it's essentially that you've got to take a two-pronged approach. You want to build a diversified portfolio, because you really can't predict these things. You can take educated guesses, you can have, logical, reasoned arguments, but at the end of the day, we just saw a 6% move in 6 minutes. And, if you're not invested, if you were one of those people who, says, "Oh, I'm pulling my money out until, this volatility subsides," then you're, missing out on some of the best, potential returns out there. It's incumbent to on anyone, an investor, policymaker, an executive, to take all possible scenarios into account when you're building out an investment strategy, and whether that's at the corporate board level in your personal portfolio. We're looking out here now and seeing VIX collapse down into the low 20s. Risk assets are rallying. Treasuries are rallying. Gold's rallying. Like there's a massive risk on move right now, and I think what you've seen is maybe in real time, an acknowledgement that countries are coming to the table, and the ones who have now demonstrated good faith are now getting a shot at getting this deal done, ahead of the ones who retaliated. And for risk assets, I mean, there was a possibility that this could have happened in any day, but it happened today. And if you had, pulled your money out of the market last week during the peak of the drawdown, you just missed out on 10% gains. And that's a year's worth of gains that you're not going to get back. So, it's important to be diversified, to have exposures to different things that are going to do well, in both bull and bear markets. It's important to, be tactical if you can. If you see opportunities out there, the Warren Buffett style, be fearful when others are greedy, and greedy when others are fearful. Like that, it makes a lot of intuitive sense. It's been validated over a long historical sample that the best opportunities are out there when uncertainty's high, and when you can take a convincing position, and some things that you believe fundamentally are better now positioned for outsized returns going forward than they may have been, a week, a month, or a year ago. So, That's kind of the short story. And I'm sure all of this will be stale news by the time this comes out. But markets are moving quickly. Macro events are happening in real time, and you got to be plugged in to play the game.
Yeah, it just, it's only, I think more, I don't know, I don't remember his exact quote, but he said, when the stock market's in sale, it's the only sale people run from, right? Any other sale they rush to, they run away from that sale. It's like companies are cheaper. You want to buy them low, right? And sell them high. That's the idea, not buy them high. By the time you're hearing about these rallies in the news, you've already missed out because it's in the news, right? So you gotta really pay attention to monetary and fiscal policy, and that's what AJ does here so well. Again, don't forget to go to aliocapital.com and sign up for the beta. Join the macro revolution. Alio Capital, the only investment app powered by Altitude AI. Again, aliocapital.com. Don't forget to click like, subscribe below, and we'll see you next time. Peace, love.
Thanks
a lot,
everybody.
guys.
Thanks again for joining us, ladies and gentlemen. Be free, think macro, invest smarter by joining the macro revolution with the only investment app powered by Altitude AI. You can join the beta at aliocapital.com. Again, that's aliocapital.com. If you enjoyed the show, please leave a 5-star rating, click like below, and subscribe so you don't miss out on any future episodes. Stay free, and as always, God bless America. This episode has been brought to you by Alio Capital. Get empowered to confidently grow your wealth while strategically managing geopolitical, monetary, and fiscal policy risks. Here at Alio, we combine professional macro investment strategies, personalized portfolio solutions, institutional-grade data, and comprehensive wealth tracking into the only AI-powered financial investment app to help you achieve your financial goals independently. Be free, think macro, invest smarter. For more information, download the app now or visit us at aliocapital.com.